Janet Yellen, the Secretary of the United States Treasury, stated that in the wake of recent bank failures, financial institutions are expected to become more cautious and may further restrict lending, which may eliminate the need for the Federal Reserve to raise interest rates further. According to a transcript that was made available on Saturday, Yellen stated in an interview on CNN's Fareed Zakaria GPS that policy steps to prevent the systemic threat generated by the failures of Silicon Valley Bank and Signature Bank last month had led deposit outflows to moderate, and things have been calm. This was according to Yellen's comments in the interview, which were transcribed. Yellen stated in the interview that is going to be shown on Sunday that banks are likely to become somewhat more cautious in this environment. Before that event, we had already seen some tightening of lending standards in the banking system, and it's possible that there may be some more of that in the future. She predicted that this would result in a tightening of credit throughout the economy, which could be a substitute for further interest rate hikes that the Fed needs to make. However, Yellen stated that she was not yet seeing anything in this area that was dramatic enough or significant enough to cause her to change her assessment for the economy. According to what she said, so I think the outlook remains one for moderate growth and a continued strong labor market with inflation coming down. As a consequence of the disruptions that have taken place in the financial sector over the past month, Yellen is not the only figure in the banking industry who anticipates a pullback in bank credit. Because they anticipate that financial institutions would tighten their lending standards in the next weeks and months, several Fed officials have suggested that the U.S. central bank should take a more cautious stance. Weekly bank balance sheet data supplied by the Fed has yet to demonstrate a meaningful deterioration in bank lending, while also showing that deposit outflows have steadied in the previous 2 weeks following an initial flood of withdrawals, around the time of the SVB and Signature failures in the middle of March. This comes after an initial flood of withdrawals around the time of the SVB and Signature failures in the middle of March. In light of recent worries regarding the security of deposits, Yellen was questioned on whether or not it would be prudent for a central bank to launch a digital currency that would enable people in the United States to hold accounts directly with the Fed. There are important pros, and there are some cons with such a decision, so it's one that needs to be seriously analyzed, Yellen said. However, it could be something that is in the future of the American people. Yellen also stated that sanctions and export controls put on Russia by the United States and its allies were depriving the country of the supplies it needed to wage its war in Ukraine. She added that the price cap of $60 per barrel that Western countries imposed on Russian oil was causing Moscow's planned budget surpluses to turn into deficits. As a result of the restrictions and export limits, Russia has been obliged to seek out military equipment and supplies from Iran and North Korea. Yellen stated that the United States was taking precautions to prevent sanctions from being circumvented. She continued by saying, "But we believe that his, President Vladimir Putin's, military is really lacking in the equipment they need in order to wage war." When Yellen was asked whether sanctions could weaken the status of the dollar as the world's reserve currency, she accepted the possibility that this could happen. There is a risk that, over time, when we employ financial sanctions that are tied to the function of the dollar, it might weaken the hegemony of the dollar, as you stated. This is a risk that we take when we use financial penalties that are linked to the role of the currency. But this is an extraordinarily important instrument that we try to use prudently, Yellen said, adding that sanctions are at their most effective when implemented with the assistance of allies. As a result of the sanctions, China, Russia, and Iran have expressed a desire to find an alternative to the dollar, yet doing so will not be easy, because the dollar possesses the unique property of being backed by the assets that are considered to be the safest and most liquid in the world, which are U.S. treasuries. The dollar is the most common currency. According to Yellen, we have very deep capital markets as well as rule of law, both of which are essential in a currency that is going to be used globally for transactions. And we haven't seen any other country that has the basic infrastructure, institutional infrastructure, that would enable its currency to serve the world in this way, you say. But China does.